for coming along and first of all hearing about Michael's business and employing people is such a huge thing. One thing that we're passionate about and our mission at the Money Edge is we just love to see businesses succeed and excel and exceed expectations. We love pushing the boundaries and we love asking the hard questions if we know we can make a difference to our businesses. So first of all, getting on to the 5 steps of business success. If you want your business to thrive and not just survive in the tough times, the ultimate to that is planning. Really, that's it in a nutshell. It's planning for the future. That's the critical step. So why do we need to plan? There are many factors that work together to create risk in business. There are things like, you'll come across economic risk and uncertainty. We've had a lot of that in the last few years. Uncertain customer loyalty. People are looking at different ways to buy. We look at the internet, we look at technology, and we see that there's so many other options out there for people. So why are they loyal to your business? We look at the increasing cost of supply. We look at electricity and fuel, just as a couple. We look at interest rates. So whilst that's looking really good at the moment, what are the issues or the risks in your business in a few years' time? So how have you planned for that as interest rates start to rise? There's environmental considerations. We've got imports. We're looking at national competitors. There's so many different risks in business that we deal with. Michael spoke about one very big one, employment law risks. And how do we factor things like that into our business? How do we factor those costs in that can come absolutely out of the blue sometimes? We look at also the demographic shift with ageing business owners. And we look at there's so many more businesses for sale. One of the local agents that's selling businesses, I think when I spoke to him last, there was 140 businesses for sale. There's probably more than that. So why aren't they selling? So the first steps to understanding risks in your business that we believe is by conducting a SWOT analysis. And again, we're getting back to basics here in business. We're getting back to looking at, what are the essential steps in business planning. So first of all, it's looking at, what are the strengths of your business, weaknesses, any opportunities and threats. A SWOT analysis will help you counter your weaknesses and threats, but also look at bolstering, your strengths so you can take advantage of opportunities as they arise. I mean, that's what thriving in business is all about, is making sure that you're ready for those opportunities as they're arising. So we look at what a standard SWOT looks like, and you look at, you've got your 4 different quadrants. And you fit for in each of those areas, you go through and say, okay, well there's my strengths, my weaknesses, my opportunities and threats. While we believe this is great for the business owner to do, we find there's much more value in engaging your team to be part of this process. I'll talk a little bit later about how that can be done, but a SWOT analysis obviously gives you the basis of what you're working with and assist in generating ideas for growth, and as well as securing what you've already built, because you're wanting to build on the strengths that you already have in your business. Okay, so let's move on to the 5 steps to thrive and not just survive. So step 1 is to protect and grow your revenue. So first, with protecting revenue, we look at many businesses rely on one or a few customers. So and we call that customer sensitivity. So, ask yourself what would happen if one of your customers sold their business. Would your sales reduce as a result of that? And also, would the new owner continue dealing with you? A big issue. So how dependent is your business's survival on a single or a small group of your customers? So when we look at, for example, if you're, again, I'll use Michael's example of a plumber. If you're just dealing with one building company, are you at risk if that building company ceases to trade? So just a quick example on how you can calculate the sensitivity of your customers in your business is you look at, first of all, is to look at your average customer sale. So say, for instance, that could be $500 in your business, just as an example. And if that customer's buying from you 3 times a year, so their average sale with you is $1,500 for the year. What happens if you've got one customer that spends $100,000 with you? So you're looking at, okay, I've got 5 customers that are a high risk to my business if something happened. So where does your risk lie? And first of all, what can you do about it and how can you prevent that? So obviously your relationship with that customer is going to be number one, and nurturing that relationship. And also providing that, are you providing value in that market? If the customer did sell, what are the chances of that new person dealing with you? And also, lastly, you may set some guidelines and boundaries as to how reliant you will allow your business to become on 1 or 2, very high value customers. Okay, so now we'll move on to growing your revenue. One thing is to look at your product or your service mix. So a mix of your products that your customers typically buy. Most businesses have high margin products and low margin products, and the service or services. And a lot of times too, we find businesses just focus on those very high level services. They may not focus on, the lower level services. So looking at a quick case study, we'll look at Mary. She's runs a successful healthcare wholesale retail business. And due to her competition, increased competition and slowdown, she's decided to update a business plan. But her sales benchmark data revealed that her sales mix was heavily weighted to her low margin products or services. So if you're a service business, you can relate this to exactly the same situation. And her customer reports indicated her average sale was below a benchmark. Another key here is to make sure that you can get this information out of your accounting package or your accounting system as well, so that you can actually measure it. So with Mary's business planning objectives that included promoting her high value stock lines, but then she could give incentives to her sales staff and discounts for customers that place large orders of higher value lines. So it just depends on what you're doing in your business. So looking at some other growth tips. Also, just when you're looking at growth planning, you've got to be careful not to just completely change the suite of products and services in your business. If it's been working, consider that before you actually go in and do drastic changes. Also, leadership, spending more time with your key customers and your sales team, and investing in the sales and performance side of your team. And looking at as I said before, your existing customers to identify if there's any low-cost sales growth opportunities. We call it like low-hanging fruit, basically. Are there any opportunities in your business that you can offer your customers lower cost products or lower cost services to them that they may find it a lot easier to take up or do business with you. And then looking at staff performance bonuses and restructuring salary arrangements to be based on performance, and obviously being careful with what Michael has already told us about paying correct wages. But there are ways to incentivise staff to perform above and beyond. Okay, so now we've got our revenue growing and protected. We also want to make sure that we can maintain and improve our profits. So one of the biggest areas that we find in businesses is a lot of businesses don't know what their break-even point is. And again, this is quite a basic calculation, but it's very important that you know as a business how much it costs you to open your doors every day. So once it's worked out, it can be broken down into monthly, weekly or daily. And again, it's very important. So I encourage everybody to know what their break-even point is and to work that out. If you're based in like manufacturing industry, and you can look at activity-based costing, that is a little bit more exact as a measure because you can focus it on an activity and match as many of the costs as possible to that actual activity. And then also look at your competitors, and what I mean by that is look at how your industry is performing and use those benchmarks. Benchmarking is a real eye-opener. Like for us in our business, we monitor wages as a percentage of turnover, we look at our productivity percentages of the team, we look at our debtor days, our gross profit percentages, so we can see how we're going to our peers. And for the accounting industry, there's quite a lot of KPIs and benchmarks out there for us to measure. So, and exactly the same with a lot of businesses, there are a lot of benchmarks out there to use and compare yourself with. So as I mentioned, with benchmarking, growing your profit, it's a performance measurement process, and it enables business owners to identify areas of improvement. We had a client recently who thought that their percentage of turnover to wages was, on target. And when we've said, well, what are you really comparing that to? What benchmark? Have you got an industry benchmark for that? They were quite surprised when we've gone back and worked with them and said, look, no, it's really this. And so at least then we've been able to help them work and focus on that area in their business. So, they've seen an improvement, and it's been a focus so they can grow and improve. So, and now for KPIs. Now it's done to death. I know it's done to death, but we love them. We think they're awesome as accountants. But I think where people get bogged down on them is they try and probably look at too many at once. So just when you're getting started and you're crunching these numbers for yourself in your own businesses, don't get too hung up on the volume of them. Just pick a couple in each of the different areas. We've just got a couple of examples up there. For your growth, focus on your average sale per customer. For profit, focus on your gross profit margin. And for cash flow, look at your debtor days and your stock turnover and those sorts of things, because there are quite a few of them, but it's just focusing on the ones that are going to make a huge difference to you. But I think the big thing is making sure, as I mentioned, is making sure that you can actually get the information out of your system, because that is the crucial part, is making sure your accounting systems actually record it correctly, because otherwise the information is pretty useless. Just another look at an example of employee productivity. We've got an example of Greg and Sam, who run a successful cleaning business with their rising labour costs and reducing margins. It required a focus on improving their productivity. They've implemented a new incentive scheme, and including productivity, job standards and customer satisfaction. And the schemes included looking at capping salaries, paying bonuses, fixing rewards for equipment cleanliness, looking at, are the customers happier than they were 6 months ago, and how are they measuring that, and looking at how often they're paying bonuses if staff are staying on for 6, 12 or 24 months. So what are you doing in your business to reward those employees that are performing above and beyond? Moving on to step 3, with collecting your cash. Now this is another huge one. We've got revenues and profits growing and maintaining all of that, but what about the cash? Are you collecting your cash? Again, businesses fall down in this area, and because they're so focused on growth, and sometimes they're focused on growth so much, but they don't have any money in the bank. And when we're looking at balance sheets for them, we can see their huge debt balances. So in a lot of cases, if this is you or your business, you're bankrolling your customer's lifestyle while you're scrimping on your own. So, Or the other issue then is something else propping up your business. So again, we found out, like another quick case study, does your business cash income exceed its expenses? Ron has become aware that he's concerned about his performance. Even though he has cash in the bank, he's completed a flow of funds statement, and he's unaware that of his business trading cash profits. Ron's flow of funds statement identified a negative cash flow from trading operations. He was delaying creditor payments to support his cash flow, and I'm sure a lot of businesses in this room have experienced that, or experienced other people doing that to them. And also, he was selling small assets to fund that cash flow. So it wasn't his business that was performing well at all. He was propping it up by getting rid of small assets. So again, this can be a huge problem when you've got nothing left to sell. So again, looking at cash protection strategies. Now there's a little bit of work around doing these cash flows, but it's really, really important to know what that projected cash position is going to be. So, in a lot of cases, have you projected out to December? Have you projected out to the end of the year? And have you projected out to the 30th of June 14? Do you need to restructure banking requirements around it? Or are there seasonal issues in your business that need to be addressed in the short term? And it's being proactive about that. It's actually being on the front foot and approaching your banks and talking with them before the issue gets out of hand. And also, the last one is looking at amending your policies for debtors collection and stock management, and your debtors control procedures. So looking at other ways of, how can you get that money up front from your customers? We had a client recently, and they've changed the technology in their business from very paper-based to cloud, and they've got it all organised. They were operating their business on overdraft, and should never have been ever from the start. And they weren't issuing invoices. They were, oh no, she'll be right, mate. It'll all work out. And what they didn't realise is, they've got a housing debt. They've got other personal debts that, that money could have been sitting in their bank or their home loan. So we've managed to turn this business around. So now they've got about 120 grand in the bank when they were in 120 grand overdraft. So they're very happy. But the technology in their business has changed substantially, and they're just going great guns now. So that's very rewarding for us when we've been at them for a little while to make some changes. So, but in this case, in this client's case, is they were invoicing immediately on the spot, whereas in the past they were relying on going home at night, getting their manual book out, putting it on the system, posting it out. So their whole system has changed. So we just love those stories. So look at those debtor control procedures, place tighter limits on credit cards and account terms. If you can, get a credit card facility in your office if that's how you can get your payment quicker. It may cost a little bit more, but what's the cost of having that money in your business? There's a few hard things here, refuse to supply to accounts at risk. That can be really, really difficult in a small area. There's relationships, there's all those sorts of things to deal with. But, at the end of the day, it's looking at, well, can your business survive if those payments don't come in? And looking at if there's, possibly cash on delivery terms and those sorts of things if they're available. Okay, so moving on to step 4, looking at creating, measuring and growing value in your business. Most people look at valuing their business when they're just about to sell, and that's the scary time because there's not a lot of opportunity that that we can help them with trying to get their business ready for sale, and sometimes it can take between 3 to 5 years to get a business ready for sale. And also the other thing is from a planning perspective, knowing what that value is of your business And a lot of times that is what people expect to be their retirement. So it can be very frustrating for us when we see the potential, the huge potential of business. So you may have an end value goal in mind. So that's why, you might want to come along and get it valued, or you might, there might be some opportunity for you to, for a bigger person to come along and buy you, so you might get it valued for that reason. But really understanding the value is really important. And also we use it as well, I suppose a more proactive use of it is to look at how your business is growing. So we use it as a measure of growth. So that's more exciting for us as accountants, rather than, okay, I want to sell it tomorrow, how much is it worth? Whereas we encourage our clients to be implementing new things in their business. We value it before we start, and then we look at it in 12 months, another 12 months, so we can see the value grow. So there are 3 common methods of valuing. We look at your net assets, future cash flow or profits, and the capitalisation of that profit is the most common method for small to medium enterprise that we see. And obviously the more profit is the higher the price of the business. So do you know what the value of your business is really worth? An over or understatement can be, I wouldn't say an overstatement can be a problem, but it depends, but an understatement of that value can be disastrous. And again, as I mentioned, we look at value improvement. That's the part of business valuation that we like. But again, buying or selling, again, we look at values of business when clients come to us and say, look, well, I'm looking at buying this business. What do you think it's worth? There could be ownership changes, disputes, there could be insurance, finance reasons, and succession and estate planning is another part that we work closely with a lot of our clients on. When they're looking to, move businesses to the next generation, those sorts of things. And the technology now exists to accurately determine a business value, a lot more readily available than what it was a while ago. So again, for most business owners, the business is potentially their largest asset, as I said, of the family. And looking at a quick case study, we're looking at Peter. Came in end of year, just going through his tax returns, and we've asked the question when he was thinking of selling his business. So he said, okay, well, 3 to 5 years. He put a value of 1.2 million on his business, and we challenged him at that and said, look, how about we do a valuation? So we decided to go ahead with it, and it only revealed a value of 800,000. So again, your own worst nightmare if you're very, very close to retirement. But in this case, Peter had a few years to work on it and to get that value up to that 1.2 mark. So again, this is an area where we're passionate about educating our clients into making sure that there are things that they can do in their business if they're getting it ready for sale. So growing your business value, there's lots of key drivers in there, some non-financial, like things like looking at, the length of the lease. It might be a location of the property where your business operates from. That could be a very big ticket item as to why your business is worth more. You could have very good business systems in place. So, if I can walk in and buy a business that I know nothing about, because there's great systems in place, that's going to be worth a lot more than something where no one knows what they're really doing. Also, reducing the owner reliance, that's a really big one. A lot of people think that, oh no, I can sell my business when it's all up in the owner's head. Nothing's down on paper, and that whole business has been operated by that person for the last 20 years, and all that knowledge is in that person's head. So it's really, really difficult to put a high value on a business like that. And again, looking at customer loyalty and again, staff retention and motivation. So again, come to step 5, and it is have a plan. I cannot stress enough having a plan, that success requires that planning, and successful business owners understand that planning is the key to their future success. and they invest time in planning, they seek advice. And, you know, there's constant challenges in the business environment, and we've all heard it. Everyone tells us every day, work on your business, not in it. And to be successful, you definitely have to do that. So just as a little self-test, there's a few little questions. Nicole just finds them. Yep, thank you. You know, are you attending regular conferences? Do you attend business management training courses? This is, you know, one thing we find is a lot of business owners end up in business by default, I call it. They might come with their skill or their trade, and all of a sudden they're in business. And no one teaches us this at school, how to run a business, or, you know, a lot of people learn by doing and learn by making mistakes in business. So, you know, spend time learning about, you know, how you can better your business by going to lots of courses and educate yourself. How much time do you allocate to your working week to work on your business? And do you attend information system sessions? And, you know, hearing from, you know, Michael this afternoon about, you know, employment law, such a big area in business. So please, I encourage you to spend time on your business. Now just a little bit about what we're up to in understanding and specialising and advising in small to medium enterprises. But the focus really for your business is to get the information out of your systems. Such a key is to know where your business is at every week and have systems in place that allow that. The technology is definitely there today to be able to get the information out and to use it to your advantage. Just at the start I mentioned about a SWOT workshop, and if anyone is interested, we've just had great success with these. We've done quite a few of them now, and we're just finding engaging your team as part of this process has been very, very, very valuable. It takes a little bit of time, but getting your team together for a couple of hours. So we've just got an offer there this afternoon. If you are keen, is to, you know, get your team together and we can do a SWOT workshop with you at a discounted price if that's something of interest to you. So now I'm standing between everyone and a drink or going home to their families. So thank you everyone for attending, and thanks again Michael for your very good presentation this afternoon. And I'd really like to ask everyone to fill out the feedback forms if there's anything there that we can, any other sessions that we can provide you, educate on, please let us know. If you were after a copy of the slides, please email us and we will send them out to you. And has everyone got their card in for the Lucky Door prize? Did everyone get a chance to put their card in? Yep. Oh, sorry, I didn't ask for questions. I rushed to the end.
Just want to do this now.
Can I make